you'll note that here's our inventory account. If I go into it, let's go into the 2024 activity within it. You can see that this is being recorded in dollars, of course, and it's going to be increased. Notice it increased with an inventory quantity form to start with, but then we purchased inventory with checks and we decreased the inventory when we sold them. That would be with invoice forms and sales receipt forms. So this is being tracked by dollar amount on the financial statements. Let's go back. The other side of that, when we sell it, is going to the income statement, and it's being recorded as cost of goods sold perpetually when we sell the items. And let's open up another tab to look at the subledger. So I'm going to duplicate. I'm going to right click and duplicate. And then we're going to go to the reports on the left-hand side, reports. And I'm going to look at the inventory valuation summary. Inventory valuation summary. Now we can also look at the inventory detail or the inventory worksheet. The inventory worksheet in particular might be designed specifically for a physical count. But let's first look at the inventory valuation summary. Going to close this up. And so there we have it. So now notice we still have the dollar amount here, but it's actually tracking the quantity of inventory units. Now, again, you've got scumbags out there that'll steal your stuff. They'll steal it if you leave it on the porch for like 5 seconds. It'll be gone. And so you're going to have to count the inventory, or else you won't know how much stuff was stolen, right? Especially in California. They actually incentivize that. The pirates are running the actual place, for crying out loud. In any case, so what you do is, so you have to count the inventory, and then if the physical count is less than that, you're going to have to mark it down. You're going to have to write it off. You're going to have to record a transaction, reducing the units of inventory, which also reduces the dollar amount of the inventory, and records it to some kind of expense account, which might be cost of goods sold, or you possibly have an account for shrinkage or spoilage or theft, whatever you want to call it. All right, we can also, if I right click on this again and duplicate it again, and we're going to go into the reports on the left-hand side. If I type in inventory again, inventory, we've got the inventory, physical inventory worksheet. So this will give us just the units of inventory. So now we've got the inventory on hand, just the units of inventory, and we can use this for the comparison. Now, in an internal control, if you're at a larger type of company, what you really want to do typically is basically have someone count the inventory without the physical count worksheet. Otherwise, you might have lazy people out there. You might have union workers. We have a lot, that don't, if they can cut the corner, they're going to cut the corner, right? So you ask them to count the inventory, but if they already know that there's 25 units in the box, they might not count the box. They'll just tell you there's 25 units in it, right? So you want to not give them the answer and then have them count the inventory so that you could tie it out to the 25 right? So you can, and then we can basically get our physical count information. Then if it's something less, we can do our inventory adjustment.